This is our second episode, and today I am joined by an extra special guest, Adrian, our fund manager at Ghosal Investment Fund.
Buenas tardes, Ken. How are you?
Yeah, I understood that.
You understood that?
No. This is the Bull Meets Bear podcast sponsored by Jefferies and Bloomberg. So let's talk about Ghosal. There are many different changes that you have made. They're all exciting changes. I want to know your reasoning of why you implemented those. So last year, I was an equity analyst in the Ghosal Fund, and we pitched every 2 weeks, and there were 7 different sectors. And after we pitched, we didn't really follow up much on a stock. We kind of just did it and just forgot about it. And this year, we kind of are doing things on a much longer term scale.
Yeah.
Could you explain a bit more?
Yeah, like this has its reasoning as well. It's rational because now we're managing real money and we have to be a bit more serious about it because it has an actual impact in the profit and loss that we produce to the university in this case. We've decided, as you said, to focus on a more long-term work and research because that's more similar to what the industry standards are. You have to think that usually the industry is working about 3 months to pitch an idea. So we've decided to extend the research period of the analyst to 4 weeks. And in these 4 weeks, they will have to start by spending 1 week in its entirety to decide which stock to pitch. And I think, and I'm always mentioning to Ghosal members this, because deciding where not to invest is as important as deciding where to invest. We're gonna spend 4 weeks in this case analyzing a company, and we don't want to, in our 3rd week of research, realize that this company had a litigation issue that could be that could make them a target for short sellers. So we need to make like a proper initial research in order to get into it and get into the deeper research. And then on the 2nd week they have to submit a 1-pager, which is a mini research report, if you like, about what they've researched and a brief investment thesis or initial investment thesis that they've produced with 3 points, 2 or 3 points, telling us, the management, the view. What, after all the initial research, what points do they think are the most interesting of the about the company or more valuable for a future investment, right? So which points could support the stock price much more than others, you know? So and which points they are convinced by. So that's the 2nd week, and then the 3rd week is just the deep research week, and we will finalize by producing the stock pitch, which is only shared within the investment committee, so internally. But then one other change that we wanted to implement this year is how we communicate to the exterior, right? Like the external university, and how we can support our analysts in allowing their research work to be read by the industry experts or by our LinkedIn connections, you know, taking advantage of the exposure that Louis has with the city to try and get our research reports out, and let's see what consequences that has. So with the research summary, that's our intention, and that's what we are going to publish. As well, we will include a macro report, which the analysts will have to produce, not on a weekly basis. They will work cross teams in teams of 6 analysts from different teams to produce this macro report, because we think as well it will be valuable for both the university and for our own activities. So yeah.
Oh, nice. Very, very interesting breakdown of the changes. I want to ask you about ESG and also the way we do DCFs. Last year for ESG, we just took MSCI ratings and Sustainalytics ratings, and we basically had a bottom line. Anything under that line, we cannot pitch.
Yeah.
This year, we're focusing a bit more on potential, isn't it? You reiterated a few times that it's important to justify ESG ratings are the way they are and what it's going to look like in the future. And also DCFs, you brought forward the idea of reverse DCFs, which are a lot more conservative than what we're doing last year. Could you expand a bit more about these?
So with ESG ratings, which is environmental governance, environmental, social, and governance, there is a lot of controversy in the financial industry as well as of how we use those ratings to include those in our research and to allow to define better our scope of possibilities that we have to pitch. So there are two currents of work at the moment. Some people think that they have to be very kind of strict with the ESG ratings, and they will only accept AAA or AAA, AA ratings in their investment environment, or better said, the investment possibilities. But there is a growing current of thought that is thinking, okay, maybe this company doesn't have now the highest ESG ratings, but if we focus on the business model of the company, actually they can produce, or the externalities of the products that they are producing, or they are supplying to the markets are of huge benefit, are hugely beneficial to in the future to consumers and to everyone. So we might as well not focus on the present rating, but let's do a bit more research on the fundamentals of the company, and let's see if that company in its nucleus is an ESG company. But more than just following a set of rules that MSCI sets, and that's how they come up with those ESG ratings. Coming with a present example, FTX had a higher governance score than I think Chevron. And this is what has happened with FTX, which has been a cryptocurrency exchange that has gone bust because they were basically misusing customer funds for their, I don't know, personal purposes, it seems. How can that company have a higher ESG, well, in this case, governance score than a company that, yes, it is an old company, but it has been established for the long term, and as far as I know, they don't have as important litigation issues as FTX at the moment. Mm-hmm. So yeah, that's one of the reasons why we've decided to implement that into the fund. And then with the reverse DCF, basically what I was seeing during my time as an analyst and as senior analyst in the fund in my first and second years was that you inputted like long-term assumptions that even industry experts don't more or less know how to estimate, because obviously you have to predict the revenue growth rate and the operating margin, which are the two most important ones, in my opinion, during 10 years. And then the terminal value assumes that the company goes to infinity, like it will just exist forever. How can you value that? I mean, it's quite complicated. So at our level, I think it's much efficient for us to just focus on, okay, what is the market implying with the stock price that we have currently? What are the assumptions of the market? Come up with those. Obviously, you have to as well make reasonable assumptions on, because you have to tweak those those assumptions as well to get into the 0% upside, which is to get the stock price at the moment in your valuation. So let's come up with those, and let's just decide whether we think, from our research, let's just decide whether we think those assumptions can be broken to the upside, or we think they are fair, or we think they are too optimistic. So that will drive our investment decision of whether to purchase the stock, don't invest on it, or hold it if we have a position on it. Yeah,
I see. Yes, once again, a very thorough breakdown and a very, very interesting take on things. I certainly believe that this way of doing things will add more value to all our members within the Ghosal Fund, because we really have to critically analyze every single assumption that we factor into the model. So the discounted cash flow model, the DCF, for members that don't know, is a model that is used to predict a company's future value. And you have to make loads of assumptions. Yeah. People may agree, people may disagree, and sometimes the things that you predict might not be correct. So by putting
most of the times,
by putting a bit more thought into these assumptions, we can get a more realistic value.
Yeah,
and that way we can pick better stocks. And having a longer pitch horizon.
Yeah.
So instead of pitching every 2 weeks, we pitch every 4 weeks now. It gives us a bit more time to understand the qualitative aspects of our pitch, to understand what the business model is actually, before people just regurgitated the first page of Wikipedia and never really understood.
Yeah, that is what was happening, and yeah, I think it's just about the value. It will add more work into our members' task list, I guess, because you have to spend more time. But I guess if you're passionate about this, and want to really learn about stock research, equity research, I think it's the correct way to go. But yeah,
it certainly broadens people's perspectives
yeah,
across the finance industry as a whole, regardless if they're going to asset management or not. And that's not to say that the previous years of Ghosal were bad. You know, things are about improving constantly.
Exactly. So yeah, no, they were very good. And I mean, in my own experience, I mean, that's one of the reasons why I got interested in the financial industry, and more specifically into asset management. So the Ghosal Fund was still working for its purpose, which is just promoting asset management and helping people learn about equity research, which is betting on another way of doing things. And maybe it goes well, maybe it doesn't, but that's up to the next management team to decide on which way to continue. But yeah.
Yes. So within our investment fund, we have various different roles. How do each role compare to each other?
Yeah, so we have 4 research roles. We have the quant team, so that's a separate team led by Alex, which is a vice fund manager. We have as well very interesting and exciting stuff to do with quant. Yeah, I'm particularly excited, but I think Alex is the perfect person to explain you further that I cannot describe with much detail what they will do, but yeah, I know the basics. But yeah, the other 3 roles, which is let's say my area of expertise, are analyst, which is basically composed by people that have just become interested about the equity research industry or asset management or finance, and they wanted to learn about valuation, learn about how do I analyze a company to come up with my own view on whether to invest on it or not. how to look at the fundamentals of the company. Then we have the senior analyst, which is the person that has a bit of experience. It can be in the Ghosal Fund and has been internally promoted, or can have some experience externally, whatever, you know. That's a middle management person, let's say it like that way. And then we have the associate. The associate is the team leader. So basically, is the team leader of each industry team, which we've kept from previous Ghosal Funds years. And the associate basically combines fundamental skills and research skills. So they do the analyst role as well, but they have the additional leadership responsibilities, which is to coordinate the team, make sure the analysts are learning as we expect, make sure all the work is up to a certain quality. Everyone works collaboratively. So yeah, basically a team leader. So yeah, those are the three.
And within each industry team, there are sub teams. So people are now paired up to support each other and encourage a bit more teamwork.
Yep, exactly. Yeah, it has two reasons. One you've said is teamwork, a bit closer teamwork, and then the second one is because we want them to develop sector specific expertise. So basically, in your case, we have you're the team leader of industrials, but industrials is a huge sector. You cannot develop even the minimal sector expertise in 1 year. So, well, in 1 year, in less than 1 year, because we are here until the end of learn term, I think it's called.
Yeah, then we have summer exams.
Yeah, exactly. Yeah. Then we have summer exams, and that's takes the priority. But I lost my train of thought. So basically, you cannot develop the expertise in the whole sector. So why not focusing on a subsector and develop the subsector expertise? So basically focus on aerospace or I don't know, the chemical industry, whatever, you know, a specific industry a specific sector, industry within the sector. Yeah, that's the.
I see. Now I want to ask you a bit more about yourself. So, you talked a lot about the investment fund as a whole.
It's my life at the moment.
Yeah,
it's the investment fund and then the university. It's horrible.
It's extremely busy, guys. It's nuts.
It's horrible.
So how do you feel about being a fund manager?
It's my first experience managing 50 people, which is quite a lot. Today I was speaking to a colleague from UBS, and which might listen to this podcast, and I was saying like it's a bit crazy, you know, how at the end of the day I was the last important person in UBS, and now you have leadership responsibilities and you have to manage a big, what I consider at least a big group of people. So for me it's a learning experience in terms of public speaking, in terms of this experience. I've never done a podcast before, so it's a learning experience. I'm enjoying it, but it is true that the workload that comes with it is quite a lot. But
it does demonstrate a lot of resilience from your side to pull this off. Just the hiring process.
The resilience as well of my vice fund managers, which do a very good job.
Yes, we all seem to work quite well as a team, a big team of 50-something people. And it's no easy job to manage all of us, isn't it?
Yeah. It is easy. You behave.
Okay, so, yeah. What do you do in your free time, and how does it help you balance between work and life?
Well, I mean, I'm a normal student. You go out on the weekends, on Fridays. Remember the last Friday, Ken?
What? Sorry, I'm deaf in this ear. Well, I've got headphones on, so I'm deaf in both ears.
You're definitely both. Yeah, definitely. So yeah, it's a normal. Yeah, I don't know. You go out. I play tennis when I can, because I really like playing tennis, but I had to leave it for for a long time because I don't know. I was playing like competitively in Spain back in my home country until I was 16, and then I went to study baccalaureate and I had to go out of my town. So yeah, I left that hobby, and now I want to retake it. So that's what I'm doing, and then go to the gym. Yeah, I mean, not much more. I enjoy as well, obviously, reading about finance, economics, and all this, and as well I try to invest myself with my own money, and yeah, it's a bit tricky at the moment, but yeah, I think it's a learning experience because even if you're managing real money and you're not managing your money, the emotional intelligence that you need when you're managing your own money, when you see your account losing pounds and more pounds and more pounds, you say, I don't know why I'm doing this, and you keep to those positions because you keep to your thesis as long as it's not violated the thesis, then that requires a lot, and you learn a lot about your emotional intelligence. And I recommend it to everyone, to even if you invest £100, it's good to start with. I mean, it's more about how you develop your own mental, resilience, as you say, to keep to your thoughts and not be driven by daily volatility. So yeah.
So you say you read about finance. What's your favorite book that you would recommend to other people?
Yeah, so in my dissertation, I'm working on accounting fraud, which is it's more present than most people think, I think. So my favorite book that I recently read is about that. It's called Financial Shenanigans, and it's a guy who's just been spending his own life. I think it was short selling, and he just describes, the most used accounting fraud techniques used by companies when they report their financial statements. And it's very interesting because there are a lot of ways they can hack the system, as to say. There is a lot of earnings manipulation even within the GAAP, which is generalized accounting, accepted accounting standards, and within that they have a bit of a scope to tweak things and make earnings look better than they really are. In both ways, they can bring earnings forward, or they can delay earnings when they have a lot of them. So, for example, I don't know about any energy company, but probably the energy companies that have recorded their one of the best, years in earnings driven by the energy crisis, probably, delaying a part of those earnings to later when things are more complicated to them, for them, may have an impact on the stock price, and they may be incentivized to do that. So that book basically summarizes every way they cheat, basically. And it's a nice book.
Yeah, kind of reminds me of that Enron scandal before.
Exactly. Yeah. Actually, yeah, the guy uses that example, which is
nice.
It's one of the most popular ones and most important ones. Yeah.
But yeah, let's talk a bit more about UBS. So Adrian has had a fantastic year in asset management within UBS, one of the largest firms in the world. How did you go through the super intensive application process and become successful with it?
That's a good question. I don't know. I think, as with investing, this is luck as well, partially. Lack
Just being humble
and
now.
persistent. No. But lack and persistence, obviously. I mean, if you don't apply, prepare yourself, and like do your best, you won't succeed. That's a given. But coming from Lancaster complicates things. That's also a given. We are not known down there in the city. I mean, I remember that I had to explain multiple times where Lancaster was. So yeah, no, it's true. Yeah. I mean, we are in disadvantage against not even Oxford and Cambridge. That's another question. But against Bath or Exeter. You know, because they are in the south. That's it.
At least people have heard of those places. When I tell people at Lancaster, I have to say, well, there's more sheep than people here.
Exactly. No, but well, going back to the question, I mean, I think in the HR stage, okay, I would divide the interview process in 2 stages: the HR stage, and then when you go to the assessment center. Then in the HR stage, it's all about communication, how well you can communicate your ideas, whether they think you fit into the culture, which probably not a lot of people would think that's the case, but yes. For example, in UBS, they are a Swiss bank. You have to fit into the conservative Swiss culture. Okay, so checking everything before we move on. Okay, and just walking on, I don't know if you say this in English, but just walking on firm floor or rock or whatever. Yeah. Don't walk too fast. You know. And they try to make a judgment in a video interview. In my case, apart from the online test of before in the video interview, they try to make a judgment whether you're really interested in finance. You are you have things to say, which is difficult at the first when you're a first year. I found it very difficult as well. So that's why I think it's more about communication and how you come across throughout this through the screen. And then in the assessment center, that's another topic. Like in the assessment center, you are interviewed by the team colleagues that you will be working with. And they are team colleagues. So you have to remember that. I mean, they want someone that they can get along with. That they can work, not long hours as investment bankers do, but you work long hours as well. So I think it comes down to personal preference in the interview. It matters with your experience, but if you two guys in the interview get along and connect, I think you have high possibilities of getting an offer. Because after all, if you show passion to learn, a real passion outside university of the role that you're applying for, the Ghosal Fund is an example, but you can join any initiative in Lewis or any other society. If you invest your own money, that's another example, you know. That's why I think it is a good thing to do. But ultimately, you have to connect with the interviewer. Without that, it's just like we are humans. So yeah, people try to see if that personal connection happens, and it happened for me, luckily. And yeah, like the experience has been very good, amazing experience. I think I cannot recommend UBS enough. It's a really good firm for joining the financial industry. The culture is much more relaxed. MDs managing directors are very approachable. You don't have to go through layers of middle management to get them. You can, as an intern, contact them directly. You have a lot of flexibility to work on other projects and other departments. I don't know. I think the people are the best thing at UBS. I mean, culturally, I felt very welcomed, and okay, you can always find disadvantages compared to other American banks, maybe dynamism, but But I think the goods, like the best things of UBS, certainly for an early career and for the long term, you can tell a lot of people there like have very long term careers, which in asset management is more usual than in investment banking, but still, not having a high turnover shows things. It's like it's evidence of what I'm saying. Yeah.
Yeah. That's great to hear that you've had a very, very good experience at UBS, and it's interesting to know, the tips and advice that you have for people to walk through the application process. How I think about things when it comes to finding a job, I really, really focus on this point, right? And this point is, I really stressed about figuring out something that I actually wanted to do. Yeah. So a lot of students, they walk into an economics or finance degree, or even other degrees, and they just hear about investment banking. And then they're like, oh, this is the best thing in the world because I've watched Wolf of Wall Street once. Even though Wolf of Wall Street isn't,
it's not exactly,
it's just a film. And they become very, very drawn to just the numbers in investment banking. And they have this tunnel vision. So what I really wanted to do early on was touch base with as many things as possible, even outside of the finance industry. I think a career is such a long thing. Yeah. People often only see the short term, 3-4 years straight after grad, and they just focus on that. But
there's this sentence like, we overestimate what we can do in the short term and underestimate what we can do in the long term. And it's very true. But yeah, continue. Yeah. Like it was just
that's a good saying. That is a good saying. Yeah. So I wanted to figure out stuff that I wanted to do now, but also it will help me live a fulfilling life going forward, long term. Find a career that I can actually progress forward in. You hear a lot of people, leaving jobs. You mentioned turnover rate, and those are often people that jump into something and realize, oh, this isn't really for me. But to me, that seems like an inefficiency.
Oh, yeah.
So you're wasting time in your life. Sure, you can bounce back and do some other stuff. But say if you worked your way up your seniority in terms of your role for a couple of years within a certain sector, and then you have to restart again, you're likely to be in a slightly lower role and you have to relearn things from the ground up. That is not as efficient. And in those years you spent in that industry that you didn't really research properly, you might not be as happy as if you found something else that you're fully happy in. So I decided to do a couple internships, around different areas, find something that is the most fulfilling. And I stuck with investment banking. And throughout the application process, they often look for genuine interest. I think we saw this factor coming into play hugely when we were doing our Ghosal hiring. We needed to see our members actually be interested in what we do and have the potential to continue to grow and learn. And figuring out what you like and don't like is the first step towards that. Exactly.
No, I mean, I'm not a big defender of investment banking. I understand that a lot of people like it. I mean, I'm not saying that, but the majority, I would say, of students go there because obviously that you get a lot of money. And it is true that apart from the money, investment banking opens a lot of doors, and it gives you a lot of career paths after the investment banking period. But I mean, my advice would be, don't overestimate. If you like intellectual, if you are intellectually curious and to be intellectually challenged, investment banking, is more of a salesperson job. You earn a lot of money, but I think the money for the long term is not the most important thing. Like you should, my opinion, and after this 1 year of experience, I think well-being and having a balanced work life and being happy at your job because you will spend a lot of hours there is essential. I mean, you can tell better than I do in your internships. I mean, the hours that you work in investment banking are very long hours. So either you like it and then you don't mind doing it, or as in many cases, you end up after 6 weeks, 1 month, 2 months, just giving up and leaving the job because you cannot cope with it. It's not made for everyone, I think. And I believe that is much more suitable for me, in my case, for example, asset management than investment banking. And that's why I didn't want to pursue an investment banking career. As of now, I don't know if later.
Yeah. I mean, people change, things change over time. We never really plan out, too far ahead with a high degree of certainty. But yeah, it just goes back to the point, interest is important, and you clearly have a strong interest in asset management. There's more to life than just money.
Yeah.
Maximizing your own utility, maximizing your own happiness. There's a combination.
Should invite the economics department here, into this podcast.
Maybe so. Easter egg right here. But yeah, very, very cool. So could you explain to our viewers what you did exactly in your role at UBS?
Yeah, so I was in the multi-asset portfolio management team. So multi-asset, explained simply, like they invest in from equities to fixed income to alternatives. In alternatives, it involves hedge funds. It includes real estate. It includes infrastructure. It includes private equity. Yeah, a lot of stuff. They include in alternatives, and we have a variety of strategies with multi-asset strategies, which I think they are a great diversificator. I think it's called. It's a great strategy to diversify away from your normal 60-40 portfolio, and that's the main reason people choose them. But yeah, what I was doing is forget about the asset allocation and the research. I was and the portfolio management. I was more involved. The team was called the portfolio implementation team, which if anyone listens from my team, I don't think so, but yeah, it was a great time. We do all the rest that is not involved, that portfolio management and asset allocation doesn't involve. So it's from order generation to cash flow management, to cash management, to FX positioning, margin calls, cover margin calls. I mean, it's kind of a middle ground between portfolio management and the operations. So we work together with the portfolio managers because it's kind of a junior portfolio manager role. If we want to put it like that, you don't focus on the investment decisions themselves. You focus on the operations of the portfolio. You don't focus on the operations of UBS, but on your portfolio. So it's a market facing role, which is great. You deal with the traders, you deal with the portfolio managers, and you deal with a lot of assets and a lot of strategies. So I loved the exposure, to everything basically that it gives you. It doesn't. I mean, if you go to active equities, for example, which I really enjoy as well, but you are stuck with one single asset class and you're stuck with one single task. Here you have to know a bit of everything, and I think for an early career that was very helpful, and that's why I enjoyed it.
How does your experience at UBS working in the industry compare to your experience being at school?
It's university is much less structured than working, less stressful, even though the workload can be high as well, but you have to think that even though you don't have direct responsibilities as an intern, I mean, you have that indirect responsibilities. You don't want to do it wrong, because first, that will hurt your chances of being hired back. Second, because that is a risk to the business and to the balance sheet of the business, in this case UBS. So you don't want to do it wrong, and it's a lot of money, that you're dealing with, and you want to be correct. So I think the two main differences are responsibilities are lower in university. If you mess up, you don't lose millions, and it's less structured. I can wake up a bit later. I don't have to commute for 1 hour into my job. The life in London and Lancaster is very different, and contrary to what most people would say, everything has its advantages and disadvantages. I'm quite happy at the moment here, with sharing my last year of uni with friends and everything. In London, it's much more hectic. It's you focus on your job much more, even though you also get along and you get your group of friends there. It's not the same, because it's kind of a relationship with your work colleagues that is a working relationship after all. So everything has its advantages and disadvantages, but yeah.
Yeah, I guess being in school, you learn certain things, and then working in industry, you pick up other things as well, and then hybridizing them all together makes you, a better person.
Yeah, I would say
so much.
In terms of difficulty of the knowledge that you deal with, I would say university is more difficult because at least my maths part is quite challenging. Even though I'm doing statistics, and most people, pure mathematicians, will kill me for saying that. But I'm comparing financial industry with this. I mean, even if in the financial industry you have contents, that are difficult to understand, and you have to deal with them and apply them in real life, still the things that you learn or the content that you cover at university, I think is more challenging. Yeah,
I see. So now, still talk about working in the industry, but slightly veering off. Front office, middle office, back office. When people join uni and they're looking at jobs initially, everybody swamps front office because they think that's the best thing in the world for some odd reason. And they completely ignore the others, which doesn't make sense to me, because I think, everybody, first of all, everybody's valued equally. We're all human. Just for example, going to Costa and there's a barista serving you coffee, they're no less valuable than you are working in the finance industry or in a front office role. So why do you think people think this way? And also, what advice do you have for students going through the application process and see the different roles within the same firm?
I think the university has a lot to do with this. The only thing that they tell you when you come to university, especially during my first year, is be a trader, be an investment banker, be an asset manager. That's it. And I think it's important to highlight. It's essential to highlight that the financial industry, even within the front office, if you're not an investment banker, it doesn't happen anything. It's just you have a lot of places to be in. You don't have to go to JP Morgan, Morgan Stanley, and Goldman Sachs. There are a lot of shops that are smaller that you can go in and have a even most valuable experience for you, because you get much more responsibility. So I think it's important to highlight both of them. And I think university lacks that, because obviously everyone you see the figures that an investment banker earns. It's much more easy to sell, go to investment banking than go to, operations or compliance or IT, But software engineers are essential to the firm. Having internal efficient systems, it saves so much money. So basically, the front office, for people that don't know, is everyone that makes direct revenue to the firm. Basically, that's a front office. Then the middle office, it's the one that stands more or less in the middle. They they are not directly involved with clients, but they are more involved with the front office. I would classify here the risk department, for example, and then back office it will be, HR, tech, operations, all the stuff that takes care of group treasury and the finance department as well. That takes care of the daily business of the business. Mm-hmm. You can make so much savings for the business from the operations department and from the tech department. You cannot even imagine. I mean, sometimes it's even more important for the daily business and daily operations of the business, the operations business, than the front office. I mean, the front office creates a revenue and they will take that place, and they are essential, because if not, the company doesn't have any money. Mm-hmm. But developing an efficient system, I don't know, an accounting system that is top notch. For example, BlackRock, mm-hmm. Developing Aladdin. That has, I'm sure, and I don't know, that has created huge amounts of revenue sources to BlackRock, and has saved millions in their daily operations in BlackRock. So the impact can be as huge as mm-hmm. with an front office role, and it can certainly be more cross-sectional within the firm. So there are a lot of financial roles, and I think it's worth taking 2, 3, 4 hours to review them all and see what you're more interested about in the financial industry.
I do certainly agree with the points that you've made. So that about wraps it up. We covered so many different things, from Ghosal to
I don't know how
UBS.
how many minutes have we done? We'll see now.
Well, we'll check it afterwards, but I'm sure our viewers and listeners cannot get enough of us. Well, the Bull Meets Bear podcast. And thank you so much to you guys for tuning in once again to listen to us talk.
Definitely.